that are weaker economies, they kind of can't like take this kind of blow, so they're like, please don't do this, right? So that's the problem. So the future, I would say that in terms of how the oil stock price would go, I think it depends on how if OPEC chooses to go and cut back on the oil supply, then the oil prices should go back up again, and therefore and stocks like oil stocks should recover. I don't think that something like this is permanent. I think that it's going to rebound back, but that's just my opinion. We'll have to see where this goes. Secret to my success. Now let's take a look at Red Robin. So the first is little brief history on Red Robin. So Red Robin is considered as in the cyclical stock industry, and it's also in the quick food and service industry. So that's why it's in the same industry as McDonald's. So I mean, it's like a fancier McDonald's, but you know, it's like same industry. So just keep that in mind. So the first Red Robin restaurant was opened in Furman, I think that's how you pronounce it, and East Lake Avenues in Seattle in 1990. However, it was really Gary Kingdon that bought the restaurant and expanded it in 1969, and he also franchised it. So it was really Gary Kingdon that really made this restaurant like this huge fast food chain that it is to now. And then also it emerged with another company with the Cider Group and 200, and the CEO of the Cider Group just became the CEO of Red Robin. And so that's right. So that's that. At least that's what it says on its website. Anyways. So the reason why I bought it is because I figured that the oil is because I was looking at some of the beef trends, the trends in beef prices, because I was sitting and I was looking up commodities. I was thinking, what can I write for my macroeconomic project anyway? How can I prep this? Anyways, but anyway, so I noticed that there was a lowering of beef prices, and so that's why I figured that it would lead to higher profit margins if I chose to invest in Red Robin gourmet burgers, and also because since the majority since they're all about burgers, right? I think that lower prices in beef would really help their profit margins. However, and and also there's the added bonus that in the case of a downward trending business cycle, since they're in the non-cyclical sector, they're essentially they're less susceptible to downward downward cycles in the business. Contracting cycles in the business. In the business cycle. And so, yeah, in that case, Red Robin would do well. So, it didn't do well, kind of. But here he's and so you see the reason. So at first it was kind of doing alright, right? Red Robin's always expanding, opening out more things. But then what happened is that because of the Fed's low interest rates, a lot of the Red Robin gourmet stocks are actually very overvalued. Were very overvalued. So then eventually, at one point, they just hit a bump, and then they just went and crashed down. And so they've kind of been staggering up. However, I noticed however, in the future, you might see the stock rebound up, and the reason why is because I was actually kind of right. And beef prices have gone down, and they have been at an all-time. They're pretty much at an all-time low. See, this is where see, we started around here. This is the beginning of the month of November. Now we're way down here. And if anyone had actually saw that new episode of Mad Money, I thought this was really cool because the guy is Jim Carrey. How do you pronounce his last name? Cameron. Well, anyways. Jimmy had actually said that had actually talked about this, and he said that the Red Robin gourmet burger is something that you might want to invest in because of these. Because it happens to be at a very low price, and because beef is starting to be low, so he thinks that there'll be a rebound, and I thought that was pretty cool that the guy was talking about my stocks. So, anyways. Oh, and I have some fun facts. I didn't have any fun facts for the Northern European Royalty Trust because it's a really vague trust, and it's kind of hard to get information, and their website is really sketchy. It's got these little gray panels, but it's a lot easier to get fun facts for Red Robin. And so the first Red Robin's restaurant was actually called Sam's Tavern, but Sam changed it to Sam's Red Robin after a song he liked to sing, which he called "When the Red Robin Comes Bobbing Along" or something. And also, since you don't care about that, they're also introducing new milkshake beers. Figured you'd all find that more interesting. So now, let's take a look at Pepsi. was actually originally the result of a merger between Pepsi-Cola and Frito-Lay, right? And so Pepsi-Cola was founded in the late 90s. Like, so Pepsi-Cola, which is like that thing, was originally founded in the late 1890s by a pharmacist named Caleb Bradham. Caleb. And PepsiCo is like, so PepsiCo's rise actually came sort of after the Great Depression, because what happened was is that at first it was like an alright, it was a decent company, but then the Great Depression hit and they actually had to file for bankruptcy. But with the advent of World War II, they were also able to get a lot of their profits back, and they became a huge competitor of Coke. It's like Coke afterwards, and so I thought that that was fun. So this is Pepsi performance. So Pepsi performance is a lot more volatile. It's a lot more volatile than my other stocks. But as you can see, start, end. Well, oh my God, I didn't mean to go back. Start, end. So you can see that there's an overall increase in trade, and the reason why is because, of course, we're in the expansionary phase of our economy, right? Our economy is recovering; it's getting better. And then there's also, in terms of these individual hikes, you can actually attribute them to more microeconomic reasons. But I'm going to tell you the macroeconomic reasons first, and then I'm going to tell you some micro things that you'll probably find pretty funny. And so it's upward trends in the business cycle overall, and also. And also Obama. If you notice that Obama actually signed in like a new free trade deal, it was actually a few weeks ago, sometime in November. I think it was still relatively recent, but anyways, it's made international trading a lot easier, and that's good for companies like Coke and Pepsi since they're very international and things like that. And so, all right, and so the reason why is so if you're wondering about this little spike up here, it's actually pretty funny because around this time is when Coke released its new it's a limited edition Back to the Future Pepsi bottles, right? Remember what you saw in the movie and Back to the Future during it was basically celebrating the anniversary. So people completely flipped out over that, and it was around here that they started producing it, and then after it stopped, I think it was funny because the stock kind of went down again. So I thought that was interesting. And so some more fun facts that you don't want to hear, but I'm going to tell you because I'm smart and I want to prove it. Anyways, Pepsi was the first American consumer product to be produced, marketed, and sold in the Soviet Union. And also, everyone knows that Coke was named. That Coca-Cola was named Coke because of cocaine. But did you know that Pepsi was named Pepsi after its original ingredients, which was cola nuts and some digestive enzyme named pepsin? And since you don't care about that, we're going to go. All right. So since we talked about Pepsi, let's talk about Coke. All right. So we all know. So the Coca-Cola company is a beverage company that owns and licenses more than 500 non-alcoholic beverages. Right? They don't just produce Coke, but they do produce Coke. But they produce a bunch of other stuff too. And it was invented. And so Coca-Cola, the original Coca-Cola, not the company, was invented in 1886 by this pharmacist dude named John Stith Pemberton in Columbus. That's not a hard name. Why am I stumbling over that? In Columbus, Georgia, and also it was also Griggs Candler bought the brand, and he's the one who founded the Coca-Cola company. And so in 1904, Coca-Cola sales hit the 1 million gallon mark, and of course it really boosted. It struggled during the Depression, but it never actually went bankrupt like Pepsi. But it did really recover after the advent of World War II because of the consumer boosting, and so that's when it really got a big old hype. And so why did I choose this stock? Because it's a non-cyclical consumer goods and service sector. It's like a defensive stock, and so in case the economy gets worse, I thought, why not have a defensive stock? And also I figured that since Coke is being increasingly targeted internationally, I figured there would be you would see an overall increase in global consumption of Coke. They like to brag on their website that Coca-Cola is the most world recognized word after the word okay or something like that, and I think that's just scary. So this is the Coke performance. So Coke has performed a lot better, and I think that this also has to do with a lot of its international marketing campaigns, right? And so what happened? And so, as we said before, we had Obama's trade agreement, right? And that really helps with the international sales. And we've also had the recovering economy. So if you notice that there's a certain dip around here, right, in which it's like if you actually notice in this one, but it was also I also saw in the Pepsi too. There's a little bit of a dip around the point when we had the terrorist attack in Paris. So I think that the decrease in consumer confidence is the one that really caused that dip both in here and also in Paris. And so yeah, we have Coke sales going up, and these are more fun facts. So Coca-Cola created our modern day Santa. Santa was originally just a dude who wore a bunch of colors. It's Coca-Cola who marketed him as this big fat red guy. Yeah, and they like to brag that Coca-Cola is the second most well-known word after the word okay, if Coca-Cola is a word. All right, now we go. It's like now I saved one of my favorites for last, Hershey's, because I love chocolate. That's why. And so the Hershey Company provides chocolate and sugar confectionery. It is like the leading North American manufacturer of chocolate and non-chocolate confectionery products. And so it was actually Milton Hershey actually founded the company, because if you're gonna found a company, you might as well name it after yourself, right? Am I right? Anyways. And it's like in 1894, and so the company rose in the next 2 decades, and it boomed during World War II. Yeah, it's like that World War II, something about war just makes all these sugary products just go up with sales. So why did I invest? So I invested because because I was looking at some of the commodity prices, and I noticed that there was a decrease in the trends in the price of cocoa, and I figured that if these trends continued to increase, that the lowering price of cocoa would increase in profit margins for for Hershey's, right? And I figured that there would be also an increase in global demand of chocolate due to some of the emerging economies. Now, as you might know, or maybe you don't know, countries such as China and India are demanding more and more chocolate as people get wealthier. There's a lot more commodities involved. So Hershey's got like this new market. So yeah, no, that worked out for me. This stock worked out for me well. And so we start up here, and so here's an interesting graph that I want to show you. This is the price of cocoa. So I was actually completely wrong. The price of cocoa is so as you can see, Hershey didn't start to really plummet until around here. This was when around here, right? Here-ish is when I bought the company. Is when I bought the company, right? I was looking at this trend, right? When I basically bought this stock. Here's the trend that actually happened afterwards. And actually, I have the real, I actually know the reason why cocoa prices have increased. It's because of it's because coca, the majority of coca comes from the Ivory Coast off of Africa. The Ivory Coast essentially supplies 2/3 of the world's coca. So what happens when there's a natural disaster and it affects the Ivory Coast? Everyone flips out and the coca, and coca production goes haywire. So what happened was that the events from El Nino, you know that El Nino is the seasonal storms, basically caused this extended, brutal dry season in the Ivory Coast, and it's the reason, and so they had lost a lot of crops because of that. So there's a shortage on cocoa, so that's why it dropped up the cocoa prices. So that's why Hershey, that's basically the main reason why Hershey isn't doing so well. The future, and so I think that the increase in cocoa prices are temporary because El Nino is a natural disaster, and I think that eventually the Hershey stock will bounce back because yeah, it's essentially just a natural disaster, and it'll eventually it's not something it's not a permanent change, right? It's just something that you can't control, right? So yeah, I think that the Hershey stock should recover sometime in the future. And some fun facts. So Hershey actually made so we told you how Hershey really boosted in World War II. Well, here's what they were doing in World War II. They were making survival ration bars for military use if more than 1 billion of these ration bars were sold. Imagine Hershey chocolate army ration bars. The company actually earned 5 Army Navy E-Production Awards for its contributions to war efforts. Also, its machine parts shop churned out parts for the Navy's anti-aircraft guns. Just imagine, sugary goodness, rated guns. Yes, and so I think that's it. I went through everything, and I managed to do